It is the fear of failure that causes you not to want to deal with the rejection and the potential hurt that failure causes. So fear cripples you on so many levels. But how is it that some people somehow manage to get by anyway? What is it that you can do that would help you overcome whatever fear you're facing? Well, here's what I was taught, and this has helped me in my life, my career, my family, my jobs, my ambition, everything. You overcome fear with your dreams. I want y'all to listen to me closely now. You overcome fear with your dreams. Steve, how my dreams gonna make me overcome my fear? Because I want you to listen to me. Because the dream is everything. The Bible says a man without a dream or a vision shall perish. The dream is everything. See, if you have no dreams and visions, you'll perish. You will die in fear. You will die sitting somewhere in fear without dreams and visions. Dreams are the counterpoint to all fear. I want you to dream so big. I want you to want something so incredible. I want you to dream of having something that's so spectacular that if it doesn't happen,
you've got a ricotta with Galvani, Italy's #1 cheese brand. No matter who you are, there are times it can be tough to be yourself when you have severe asthma. Triggers.
you would be miserable. Man, if I don't make this dream come true, I'm going to be miserable. I want you to dream so big that not reaching your dreams is unacceptable. You cannot live in this world without the dream and the vision. You can live in this world without your mother, your father, your brother. You can live in this world without a wife, a husband. You can live in this world without a lot of things. But what you cannot live in this world without is dreams and visions. You will perish without those. You have to dream of something and want something. That's what keeps pushing you forward. So if you want to overcome your fear, you do it with your dreams. And here's the side note. God is in the make your dream come true business. Ain't he? He do it all the time. I'm telling you, man, God does it all the time. He makes people's dreams come true. What are you dreaming about? Explore what you're really dreaming about so you can lose your fear. You're afraid to open your business because if your business fails, you'll lose the money you saved, and you won't open your business because you might lose your job when your boss find out. Dream bigger. Dream of what opening that business could do for you. The feeling of freedom that you would have. The extra money you could make, what you could do for your family, the things you could leave a legacy of. Maybe your dream ain't big enough. Maybe you got the dream of owning a large company, maybe a mom and pop store. Maybe you dream of climbing the corporate ladder. Maybe you're dreaming of becoming the supervisor or the CEO of the company. You got to dream so big that if this dream don't happen, you'll be miserable. Once you can do that, you can press through your feet. You can move forward. You can get on with it. I'm telling y'all, I was taught this. Dream so big that you can't imagine your life without living your dream. Let me teach you something. How many of you have a dog? How many of you have ever had a dog that had a flea on it? That's everybody. You ever seen a flea? One of the smallest insects. Really small. One of the smallest insects. But for his height and size, and flea has the highest vertical leap in nature for an insect. A flea can jump, has a 36-inch vertical. A flea, man, can come 36 inches off the ground. His vertical is 36. The average person can't do that. But a flea can jump 36 inches off the ground. If you capture the flea and you put him in a mayonnaise jar and you put the lid on it, the flea know one thing. I got a 36-inch vertical. So here he go. He start jumping, but he gonna hit himself on that lid because he got that lid on it. But after a while, after getting knocked down so many times, the flea makes an adjustment. So now the flea only jumps just to where he don't get knocked back down. He got 36 vertical, but since this lid is on, his environment got him now jumping nowhere near what he can. Capture some more fleas and put them in there. They got 36 verticals, but then they start jumping. They find out they keep getting knocked down. They start doing what the other fleas is doing. Next thing you know, got a jar full of fleas in there, ain't even using a 36-inch vertical because they got a lid on the jar. Them fleas have babies. Them babies is born into the conditions of the environment. So now guess what? The flea is born with a 36-inch vertical, but because he see his mama and daddy and all his cousins and friends jumping just barely to the roof, you know what he do? He duplicates that behavior. The flea never reaches his potential. Until you take the top off of your mayonnaise jar, you're gonna duplicate your surroundings. If you take an oak tree seed and you put it in a 2-foot pot, that seed will never become the oak tree that oak trees are capable of becoming because it's gonna get stifled by the 2-foot pot. Now check this out, ain't nothing wrong with the seed. Seed just fell prey to the environment. You are a seed from God. God made you in his likeness. He big, he vast. Don't you allow your environment to dictate the oak tree that you become. Because ain't nothing wrong with your seed. All of y'all got this wonderful gift that he gave you at birth. All y'all got one, you better believe that now. Don't die with this gift and don't never use it. All of y'all got this wonderful gift, but you gotta use it. Take your seed, take your gift. Get away from these people that's in your life that ain't doing nothing. Get away from people in your life that's hating. Get away from your family members that ain't ever opened a business. Get away from your family members that ain't ever followed their dreams. Get away from your family members ain't never been nowhere but to the family reunion. Ain't never been to a beach. Get away from them. Get away from them. I had to do it. When I told everybody I was getting into comedy, man, oh, Lord have mercy. You can't get into comedy. You ain't even funny. How you gonna make money telling jokes? Now, in the beginning, it looked like they was right, but I never gave up. All I did was identify this gift. I wrote all of my visions down. I read them every morning and every night. And I instilled them in my head. And every time I met somebody, they say, hey man, what you trying to do? I would tell them one of my visions. Somebody would always say to me, you know, I know a guy that's selling them things right there. You ought to talk to him. I started scratching stuff off my vision board. My vision board is so vast now. If I showed you what was on it, you wouldn't even believe it. Because I dream so big. I want so big because the God I serve is big. He's not a small God. He's a really, really big God. He does really, really big stuff. And I expect him to do really, really big stuff for me. If he'd have done it for Oprah, if he'd have done it for the Obamas, whoever got, why I can't have this here? I'm going to do better with it than all of it. To me, but why you can't have that? That's how you get what you want in life now. You don't have to believe me, but here's the deal. If you keep doing what you've been doing, you're going to keep getting what you've been getting.
Welcome, welcome, everybody. Good morning. All right, we have 9:03.
Morning.
We got about 21 people in here. Good morning, Christiane.
Good morning.
Good morning, Pat.
Good morning, everyone. All right, guys, just gonna allow people to come in a little bit. I love myself, Steve Harvey. Definitely love playing him in the morning there. Getting a little motivation to Steve Harvey morning.
Yeah, I like him too.
All right,
He's awesome.
we're gonna
Yeah, that was good hearing that this morning.
Yes.
That's good hearing.
What are you talking about, Shelley? The Fed is about to cut the rates next week.
Yes, yes.
What does it mean?
Well, it's great. It's a great thing because, you know, sales are gonna go up. There's a lot of inventory right now, which is great for sorry, I'm in the car line, for rates going down.
Yeah, that's the hope, right? That people are gonna start getting out and applying for loans.
Yes, yes,
Oh,
definitely.
yes.
Get the last quarter hot.
Make the last year and the year great.
Yes.
So we got, guys, we're just allowing people a few more minutes to kind of get in. For those of you guys that know us, that have been with us, welcome, welcome as everybody's coming in. I think, let's see here. I know later on, in a few minutes, as we're allowing people to come in, we have a special guest. We got a topic that we want to discuss today. We want to let you guys know about, which is going to be pretty awesome. But guys, welcome to Atlanta, to our local Atlanta Zoom. So I just want to say, just real quick here, guys. I'll just make my introduction. Give me 1 second here. I have something that I'll kind of. All right, guys. So welcome. So as everyone's coming in, guys, I want to I'm practicing my intro speech, right? So I want to tell you guys. So all right, guys. So I'm excited. So what we want to focus on is, in terms of our Zoom, is for this week is, right. So some things that I've been working on, right, is growth, connection. You know, as we explore real estate and we explore life, these are these Zooms that you guys are coming in. You guys are being consistent all the time. You know, we're all investors here. We also want to talk about kind of like the decision, right? So where we are today is the decision that we've made. So every decision that we make shapes our future. So sometimes I know as we get into life, we always try to compare ourselves to others. You know, I'm one of them. It's just one of those things. It's natural. We're humans. But I think the better way to see it is to compare ourselves to ourselves, you know, a year from now. Like, where do we see ourselves a year from now, 2 years from now, 3 years from now? So a lot of times if we make those comparisons and we put in the work and the consistency that we do every single day, I think we're going to see huge changes. But by doing those changes, it's only needs to be, you know, one step at a time, one decision at a time. So that's just, you know, something I've been thinking about, my thoughts, as we are, like, every day is about how do we improve ourselves, right? Like every morning, I love to listen to myself some motivational speech, because every single day, like when we wake up, we have to reset ourselves, because our minds and you know, like what Pace said, the lizard that goes in kind of into our head, like every single day there's doubt, there's fear, there's, you know, influences, there's the news. You wake up the news, you turn on the news, I'm like, oh my gosh, it's like 5 bad things that they talk about, right? There's a fire in California, there's a flood in Louisiana, there's the elections of whatever they're talking about, you know, out there, there's the economic, there's a school shooting. Like every single day, there's always bad news that we hear out there. Sometimes I just want to turn off the news and just kind of, you know, come into these communities, you know, with you guys and everybody here. And it's just, but with that being said, like every day we have to reset ourselves. Our minds always have to kind of consistently go back to it, right? Like I try to use every morning the what do you call it, miracle morning. It helps me out. But that's my side of the story. What do you do, Chris, to reset yourselves for the day?
Me, drink
Yes.
coffee. Yes. No, drink coffee. I love to meditate, you know, so some days I do better than others. That's what keeps my focus. And then, you know, just go over the goals. And, you know, like I was saying, we're going to the last quarter and, you know, like look back, see what you know, the gap and the gain, and then kind of set up for the last quarter and, you know, for the following year. I don't wait until December 31st to make goals for the following year. I start making, you know, them now. So, but my biggest thing is to meditate. I love it. You know, keep the focus, visualize. So
What do you guys do out there for to reset and kind of get your days going?
I
Anybody?
exercise. I try to get up early and try to reset my mind, just like you do, because, you know, we have to start like Chris said, for the next year, we have to start now, a quarter ahead for every, we always have to be a quarter ahead, 3 months ahead. And it's just every day you wake up and there's something bad happening, so you just gotta reset your mind. I exercise, or I get up early and I do it again before I sleep.
Gary said he does he walks the
He
dog
was the
in the
dog.
woods every morning. Yeah,
It's
walking in the
Yeah, so
woods
nice.
say
is
walking
wonders.
my dog is fun, but I do the miracle morning as well. You know, and reading something obviously positive, and devotionals, working out, walking the dog. I have like a almost 4-hour routine in the morning before I start my day for work to really get my head right
But doesn't that
and my
do
body.
wonders? Like Sherry, like isn't that like, you know, because we seriously, our minds, it just automatically gets to like, okay, you know, there's like fear, doubt, right?
Yep.
Hesitation, everything. So that morning, like it's just if you reset yourself, I swear, like I'm there and I listen to his podcast. There's a guy, I forgot his name, but it's just like every morning it has to be that motivation. And like I take a deep breath and I have to breathe and obviously get, you know, like working out and those things help out, but I don't always get to those routines. But for the most part, I always got to reset my mind, right? I guess that's why, you know, the universe, that's the reason why there's night and day. That's the reason why it's there for us to reset every single day, to get that rest.
Yep, absolutely. And I have not watched the news in 4 years, and it's the most refreshing thing. If you turn the news off, which is a bunch of crap anyway, it just does a lot for your soul.
That's yes. Maybe we need to get to that point where cut off the news. So all right then. So anybody else want to talk about your morning routine or how do we reset ourselves for the day before we get started? Okay, awesome, guys. So guys, welcome to our Atlanta Zoom. It is 9:10 right now, and today we have a special guest for you guys. We're gonna before I bring her up, anything else, Chris, that you wanted to add?
No, I'm just I'm reading the chat here because we're really talking about interest rates coming down and what's going to happen for the retail buyer, right? Because the interest rate have already coming down. It's dropping, this month. And some people are asking, how about for the private money lenders? Does it come down like you've seen? I've seen with my lenders, we're not charging the same rates as we used to in the beginning of the year. I think the trend started probably like in July, August. That's what I'm seeing on my end, And the loans, the SCR, everything else is coming down, which is amazing, amazing. Yara, do you want to talk a little bit? You're another private money lender. How has it been for you? Where is she?
Good morning,
Yara.
everyone.
Good morning, yada,
Morning.
yada, yada.
Yada, yada, yada. That's me.
Yara got a lot of money. So how has it been for you, Yara? Interest rates coming down.
Sebastian, their son, that tells Mom, Yara has a lot of money.
He
That's why
learned from
she
Pace.
says that all the time. How do you know that? Because Pace told everybody.
No, he listened to Zoom, Yara. We don't even told him. He was listening to Pace's Zoom. And he said, he
Yeah.
talk about Yara. He said, Yara make a lot of money or has a lot of money. I'm like, okay.
I wish. Well, regarding the rates that are being paid now, it really went down. Like a year ago, let's say, you would have an average of 10% a month. It went down to 8%. Now they are offering 5%, like 15% in 3 months. So last night I was negotiating a little higher. Thanks God I got it. But it's not the same anymore. And I don't know if it's because of the interest rates going down, or so many lenders, so many gators now trying to get their first deal, they can do for any amount. So of course, if you have the option to pay less, you go to somebody else, right?
Yeah. Oh,
That's
yes.
my experience.
Yes,
No, good to know. Any other private money lenders here that wanted to talk about your experience with the interest?
Heather,
Doug?
are you
Where's Doug?
I can speak, and I would just say I'm getting close to the same I've been getting. I've come down maybe a point on a few deals. But for the most part, I'm still getting, 12% on average, on my deals.
Mhm. Anybody want to talk? Doug? Where's Doug?
Doug, good morning.
Hey, I'm here. Let's see.
Hey,
Hey,
hello.
so I'm sitting on the sidelines a little bit right now, given the way the market is. As we're getting
Me
into
too.
the end of the year. Yeah. So I'm waiting to see what's coming of it. We'll see. But I think for me, it's now deal by deal. And I think it's being very responsible to dig in deeper into the individual asking for the loan. And I think that's certainly my growth point of it's interesting to see as I've funding a flip of someone I worked with in a different life. And what we consider done is different, but I believe it's because we started at a different place in our thinking. So it's just interesting to see when somebody goes through and goes, hey, show me your bill of materials and you're flipping a house. It's like, no, really show me. Now I'm going to really ask, show me what we're talking about. What finish looks like to you. Because it's kind of interesting. It certainly moves the dial on the ARV of whatever we're investing in. Anyway, 2 cents for the morning.
Yes, no, perfect. Thank you.
So guys, so this morning I have a special guest, a good, great friend of mine. She is here. She's gonna, we're talking about decision making and talking about how our how things have moved, in terms of like how far we're gonna get a year from there or just future planning. I want to bring up Cassandra. Cassandra, are you there? She's waking up like at 4 a.m., guys. She's coming all the way from Alaska. Can you guys give Cassandra a warm welcome?
Hey, what's up, Atlanta? I see a lot of faces in here. I
Cassandra, my
know.
good friend.
Cassandra, it's
How
so
are
good to
you?
see you.
Great to see you guys. Thanks for having me, and thanks, Pat, for reaching out yesterday. It was very exciting to hear from you.
No, thank you, Cassandra. So Cassandra, tell us a little bit more about what our subject is today, what we want to talk about.
Yeah, absolutely. So, it's really great that you're actually talking about private money lenders. One of the things I've been doing in my real estate journey is, connecting people with money. And one thing that I found as I was doing that is a lot of folks are lending out of their retirement accounts. For those of you who do lend out of your retirement account, you know that sometimes there's hoops to jump through. Sometimes there's expectations that weren't met. And especially being able to use that money like right now without it needing to go through other channels, right? So it became clear to me that there wasn't enough people in our community that knew about life insurance and how to leverage a life insurance policy in a strategy that most of you have probably heard of called infinite banking. And I never really knew who to refer them to when they were excited about the concept. So I decided to myself become the person that could help get them into a life insurance policy that fits their goals. So that's what we'll be talking about today from an investor standpoint. And I hope that I can bring some clarity to the subject for you all.
So what is the difference between, like I hear whole life insurance and then there's infinite banking. And then is there like, does it all mean the same thing? Like, tell me who is, like, I don't know anything about it. So what is the difference when people say that?
For sure. And you have to forgive me, guys. My light ring took a digger, so I'm just using like an overhead light, and that's why I look like Darth Vader or something. So we got that going for us this morning.
It's so funny. I do have a question. Can I just say something? So tell me your bio. It's so nice to see you. But so you're from Alaska. It's amazing. I'm sure most of the business for you happens in the East Coast. Tell what you do. I know we know each other from Sub2, and it's been amazing. Tell us what you do first. Let's kind of introduce yourself to who do not know you.
Chris, are you talking about her being in Alaska? Like, did the sun ever went down, or like, are you still have sun on you? Is that true?
Yeah, right. Well, now that we're in September, it is dark out right now. Like our sunrise isn't going to happen until, let's see, I could tell you. I got a little app. I don't know. It's probably like
Just look out the
6:30.
window. You don't need an app.
7:20, about 7:20 this morning, the sun will rise. So we're probably about the same as everybody right now. And then as we move closer to the, to the winter, it's going to be a lot darker, a lot longer. So around where I'm at in Southeast, we kind of have like dusk until like from 10 a.m. until 3 p.m. is when we have the most light. So we're at the top of the globe, y'all, and as we're spinning, that's why our sunlight changes. So yes, we're coming out of our manic season where Alaskans are like up until 2 a.m, like doing shit. And they're like, oh man, it's 2 o'clock in the morning. I should go to bed. And now we're going in our depressive season. It's like, man, I got to get out of bed. And it's, then all of a sudden you realize it's 9 a.m. Or a lot of people freak out and they'll like take a nap at night and then wake up at 6 or 7 p.m. thinking that they're late for work. So it's a wild swing for us up here. But yeah, Christiane, I did do a lot of business on the East Coast when I first got started in real estate, cold calling, wholesaling, doing all of those things. But now I've kind of like structured where I'm at in real estate, to not get up at 3 or 4 o'clock in the morning anymore to do real estate. I am a night person and I am a morning person. It's kind of funny, but I work night shift. So I don't prefer to get up that early. It doesn't make sense for me. And then I become a zombie and I might hurt people. So I've structured my days where I don't do that so much.
Nice.
So I've got a dumb question, right? And maybe it's related and maybe it's not, right? For those of you guys out there, have you guys ever heard about the Rockefellers? And maybe this is the same thing. So that's what you're going to clarify that today. So when they talk about the Rockefellers and they talk about I don't know, it's called like the waterfall, right? Like how did they build their wealth compared to the Vanderbilts? All right. So from what I've heard, I'm gonna ask you the myth and you guys can explain it. But the way they built their wealth is because it's on, I believe it's the whole life insurance, right? So when you do the whole life insurance, the way it works, and I'm just putting it out there. Tell me if I'm off, guys, so anybody can kind of chime in. But the way I understand it, they build a wealth is because they do it through life insurance. So they get, and I'm gonna explain it as dumb as I can be. So they get $1 million life insurance for a family of, let's say, 5, right? So and then they take that life insurance and then they pull that money back out and they use that money as a banking system, right? But as they die, that $1 million, so you have 10 family members, as they die, that becomes $10 million. And that goes on to a trust that goes on to the next generation. And that's what we're talking about. Kind of the decisions we make for today will affect us where we are now and affect us for our future. That's what I heard. And I was like, oh my gosh, is that true? Is that real? And then I came across you and I came across other people that have heard about it. Is that right? And I'll let you get started.
Yeah, absolutely. And you know what? I'll get distracted if I'm trying to read the chat. So if Pat, if there's something out there that I need to touch on, please let me know.
Okay.
Yes,
I can manage the chat, guys.
Thank you. So yes, it is a long-term strategy. And I think that's one reason why most people just put it out of their mind, right? Because life insurance is not an investment and it's not a race. So it is totally about setting yourself up for the future. And if you have that mindset about it, first and foremost, then you're going to find a product that works for you and you're going to be satisfied with it. I think that when people hear about infinite banking or hear about the Rockefellers, they're like, ooh, this is a get rich quick scheme. Like I can open up a policy and now all of a sudden I have access to $1 million. It's just simply not how it works. So I think that just people will hear what they want to hear and then they'll go in and be sorely disappointed about how it actually works. Another thing to keep a mindset about, in my opinion, because I'm not a life insurance agent first, I'm a real estate investor first, and I like to be able to help people as much as possible. So I can add value to my relationships by holding a license and making sure I'm getting you in touch with the right people, right? I've come across a lot of clients, especially investors, who either do not have life insurance or they've relied on life insurance through their jobs. And the unfortunate truth is, It's something that many people don't think about until it's too late. And what I mean by too late is they're in a position where they're older, maybe have health issues, and now they become very less desirable to insurance companies. So they're not very insurable at an affordable rate. So for example, I have a gentleman, 63 years of age. He does have a few health issues, and he's had a policy through his job for 30 years, but his job of 30 years has gone away. So now he is trying to get life insurance, and for very not great coverage, I mean, we're looking at a couple $100s a month for this gentleman just to have $50,000 in coverage. So the only thing I want to say about life insurance as a ooh rah rah is be thinking about this and planning with your family on how you're going to take care of final expenses, and if you're a primary breadwinner in the house, how you're going to replace your income sooner than later. It's one of those things you don't want to put off. So just keep that in mind.
So Cassandra, what is the difference between, guys, just so for those of you that are just coming in, we're talking about life insurance, right? But life insurance can be boring and it can be, dark and it can be scary. But what is the difference? Because we've had life insurance. So tell me the difference between, what we're talking about with, like, I believe, right, the infinite banking, the whole life insurance compared to normal life insurance. Because we have this life insurance, but the second you don't pay your annual thing, you get knocked out. So what is, like, dummy proof for me, just the whole thing about life insurance and the different concepts
Absolutely.
out there? Yes.
That's such a great question as well. So there's no such thing as normal life insurance and infinite banking life insurance. Everything is life insurance, okay? And that's the thing to keep in mind. Now, there's several different types of insurance. You can have term insurance, which isn't going to work for infinite banking. Term means you're renting coverage on your life. So if you were to pass away within your term, your beneficiaries would be paid out. Okay. So term policies are really great. They're used to supplement oftentimes infinite banking strategy maximize policies, but they're not going to be what you're going to use to leverage cash value. Whole life and infinite banking are not synonymous. Whole life has been what's around forever. So in college, actually, I used to work for a third-party call center, and I worked for Prudential Life Insurance, which is one of the biggest and oldest life insurance companies around. I was in the claims escalation unit, so I got to be on the end of when the people passed away, and it was crazy. They had these whole life policies, back then with a $300 face amount, and they had these cash values that built up to like 10 grand, that they completely forgot about. And which is the funniest part is usually they left the ex-wife on as the beneficiary. So that was always a really uncomfortable conversation. I was in the escalations unit, so I always got those ones. I saw those ones the most, but whole life policies have been around forever. There's also index universal life policies as well. And those are the two that I would say that you should consider if you're looking to utilize a policy for cash value growth. There's other policies as well, but those are more risky. Those are actual variable and they are tied into the market, and you'll need to get set up with a financial advisor that's got their Series 6 license in order to go through those. But I wouldn't say that those would be super useful for this type of strategy. So let's differentiate. Life insurance is freaking life insurance, guys, plain and simple. Infinite banking is a strategy that you can use to leverage the cash value inside your life insurance. And it's just basically this lovely fancy word. And here's why it's infinite, is because you have money inside a policy that you put there, by the way. That money came out your pocket. It was already taxed. You're paying it in form of premiums. Now, there's going to be a specific chunk of your money that goes towards the cost of insurance. And then there's going to be the chunk of your money that is building cash value. So when you're hearing about, gurus or other agents talking about a properly structured policy, what they're doing is setting up so that you have access to your money faster, because there's a lot of whole life policies that are not focused on having access to that liquidity. It makes it a cheaper policy for you, and it's more coverage rich. Right? So there's more coverage for you though when you die, or if you have to tap into living benefits. But it's not like if I put in $10,000, I have access to maybe 800, right? That's not a great policy, right? That's not a great policy for the use of infinite banking. So does that kind of clear up a little bit about life insurance is life insurance and infinite banking is a strategy? Does that kind of clear it up on
It
a
does,
base
it does.
level?
You have to clear it up a little bit more for me because I'm a little
Yeah.
dumb.
Yeah. Oh, me too. Me
Yeah.
too, guys. But I'm a Virgo, so I can talk forever, right? It's Virgo season. What's up? I've been seeing all these memes and I'm like, I'm so right. Okay. So the infinite banking concept is this. Let's just take easy round numbers. I have $10,000 of cash value in my life insurance policy. I'm going to take that out as a loan from myself. I'm going to go put that into a cash flowing project, right? So say I'm, going to lend you money, Josh, on a project that you're doing, and I know that I'm going to get a 12% return on it. Freaking great, right? Because you're an amazing operator and you're not going to ghost me and you're going to pay me my shit. But if you don't, whatever.
Can I just add? So, okay, so you get, so let's say somebody did a flip or they did a loan, right? So they got $10,000. So you putting $10,000 to buy a whole life insurance, right? As one example, or the other one, what is it called again?
Index universal life
Index
or an
universe, yeah,
IUL.
index. So yes. So, or the index one. So you put
Okay.
$10,000 into the life insurance, which the life insurance value is at, throw me a number that would make sense.
Let's just use $10,000.
So
So,
$10,000, okay.
so that's another part to it. Yeah. So, okay, I guess we can go back and add that piece in. But actually, let's not do that right now because I don't want to confuse the subject.
Okay.
All right. So I already have $10,000 cash value in my policy. I'm going to use it to lend to Josh. Josh is going to give me 12% on my money. Now, the cool thing is that while I'm lending money to Josh, my money is still growing inside my policy. So if I have $10,000, which I wish I had a whiteboard like Pace does so I can just draw on it. You guys don't want to see me doing this with my finger on a mouse pad. If I had $10,000 inside a policy and I took that full $10,000 out, it's acting as if I never took it out of the life insurance policy. So the growth is still continuing to happen there. When I get my crediting for the year, it's going to act as if I never took that money out. Now, when Josh pays me back, I'm going to be a responsible banker, right? And I'm going to put that $10,000 back into my policy because it's in my best interest, or maybe not, right? I'm going to pocket that 12%, and that's where my gain is. But again, that $10,000 is going to get credited with my dividend or with my interest rate each year as if I didn't take it out. Now, let's say worst case scenario, Josh's deal goes completely sideways. And Josh, I'm sorry to pick on you. You were just the face in front of me. His deal goes completely sideways. He can't pay me back. Son of a biscuit. Where are we at, right? I want to tell you something. When you take a loan on a life insurance policy and you're earning on it still, you are paying an interest rate for it. Now, interest rates can vary from carrier to carrier, product to product. It's really not something to focus on. And we could talk about that more in a little bit. Let's just say it's 5%, right? It's 5% simple interest. So now I don't have to pay that $10,000 back ever, right? That gives me a little sigh of relief. But at the end of the day, it was my money, right? It was my money anyways. I would need to pay that 5% interest. It would be in my best interest to do so, because if I don't, that will start reducing the cash value of my policy and it could lapse. And the last thing you want your policy to do is lapse. If you're putting money into something, you want to keep it going. So that's the other thing, like I was saying, it's a long-term strategy. You can't go into it thinking, okay, cool, I'm going to go put some money in, I'll go take it all out, and it doesn't matter if I put it back in again. That wouldn't be a very good infinite bank, right? That's a bank that starts here and then it declares bankruptcy.
So you're saying that $10,000 that you put into your whole life insurance or your life insurance, it earns 5% interest here, and you can pull that money back out, or you can pull, let's say, 80% of it out, right? And then you can loan that money out and it makes money over here, but it's earning 5% interest here.
Yes, that is correct. Let's just say 5%, for example.
Yeah.
Because again, there's a lot of options out there, you guys. So
and that's 5% on 10,000 that's not there because I've already pulled out the other 80%, and I'm loaning that money out.
Right.
I'm double dipping. You're double dipping. That's what it is, double dipping.
You're double dipping, absolutely. And sometimes I can cancel out with the loan rate because you do pay interest on your loan when you take it out, but then it's just $0 money, right? So not too shabby at all. And that's why it's infinite banking. But the real important part to remember about infinite banking is if you don't keep your policy funded and you just take and take and take from it, it will shrivel on the vine, right?
Makes
So
sense.
you have to be a responsible banker. And that's the number one thing that I see people that want to get into this. And they're like, oh, wait, like I thought I could just put the money in, I could take it out, and I never have to put it back in again. And then it will just grow and grow and grow and grow. Yes, that is true. Let's say I just have the $10,000. I'm never planning on paying it back. I'm just going to keep recycling my money outside of the policy into, let's just say, EMD deals, right? And I'm going to keep making a return on that money while it's growing in my life insurance policy. That is true. And as long as your policy growth is outweighing the interest charge on your loan, then your policy will self-sustain. But as a responsible banker, you would pay your interest back to yourself, and usually more, right? Pay yourself first. Have we all read Profit First? And we've
Yes.
heard it a million times, right? Pay yourself first. We can't forget that and when we become our own bank.
So when
So-
so on the end part of it, sorry to be dark on an early Friday morning, but in the part, when you die,
Mhm.
that money goes back, you get your death benefits, what they call, right? So that money goes back to your bank or your trust. I think that's what most people would keep it in. Is that correct?
Right. So, and I see Troy kind of has a similar question. He said, if I borrow 10K from the policy and I pass away before paying it back, that 10K gets deducted from the payout to the beneficiary. Absolutely correct. So your cash value is collateralized by your death benefit. So if you don't pay that money back, it's just simply reduced. Now, something to keep in mind as well when you're looking at policies and how to design them, these are just tips and tricks. You know, whether you guys go through me or you go through somebody else, you could take a look and there could be a difference in cost for a policy, whether you do an increasing benefit or a level death benefit. So say I've built up $100,000 of cash value in my policy for, let's say, a $500,000 face amount, right? A face amount is what gets paid upon your death. So is everybody clear on that? Can we throw some ones in the
Face
chat
amount.
if that makes sense? A face amount is the coverage amount that is payable upon your death. Awesome. We got the ones flying in. Awesome. Everybody's awake this morning. Good, because it's 9:30 where you guys are at. So good for you. So the face amount, let's say 500,000, right? Well, can sit there in a level insurance policy. And as you build cash value in it, it doesn't change. So soon, and this is pretty common with whole life policies, soon you've paid in enough and your policy has grown enough to completely reduce the life insurance carrier's liability, right? Like your policy and the money that you've paid in has grown enough to equal your face amount. And a lot of people are like, well, that's some bullshit, right? Like, so I've saved all this money and I've given you guys access to my money for all of these years to invest and make your money life insurance company. Like, I basically just paid for my own death benefit, right? So there are policies where you can have an increasing death benefit where your face amount, 500,000, is also increased by the cash value that you've built in your policy. But it is always going to be reduced out. Any outstanding loans when the death benefit is payable are always deducted from the value of your policy. Does that answer your question? And Pat, yours might have been slightly different, but I did see Troy's and I wanted to address that quick.
No, this is great. No, your answer was amazing. No, I just wanted to clarify it. I wanted to just, like I say, bring it down to, a first grade level, just to kind of explain to everybody here. Because
Yeah, and we can go in the weeds, right, on the different ways that you can structure these policies. There's three main people in a life insurance contract. Sometimes they're the same people, sometimes there's different people. So there's the owner, that's the person that controls the policy. There's the insured, that's the person on whom the health is based off of, and who, if they pass away, the face amount's paid out. And then there's the payer. Now, those three people could be different, but the owner is the one who controls the policy and controls the money in it. The insured is the health on which it is based on, and the payer is the one who pays the premiums, okay? Those are the three important people when it comes to the policy being in force. And then there's your beneficiaries. Now, when you had brought up the Rockefellers earlier, their beneficiaries were a trust because they wanted very specific instructions, foolproof, right? How many of you guys right now, I don't know who all has kids, or let's just say kids under 10, would you just give them like $1 million by the
No
time they're
way,
15?
but it's,
By the time-
no way, but I'll say the comment, you know how people always talk about, I hear this all the time, generational wealth, generational wealth, generational wealth. I mean, I love it, but this is the ultimate generational wealth. If you want to do that, put it in a trust, you put it, you know, a life benefit or a, you know, a life insurance, and as everyone dies, it goes back into that trust, it's building that wealth. Now, I
Right.
personally don't believe in saving my kids any money. They're gonna have to earn their own money, but I'll give them a start.
Right. Well, let's break that down and why that's so smart. One, guys, discipline. It's discipline. So when these policies were being cashed out and going in the trust, it was very specific instructions that it will purchase more life insurance for each one of the members of that family. Okay. Because thereby they are creating these banks. So, you know, we're just writing a policy right now for one of our sub 2 students, $1 million baby policy, right? So dad's going to be the owner. He's going to start paying for a policy for child that's 7. You know, by the time he's 23, that growth will be at $1 million. Now, does that mean kiddos getting $1 million or anybody's getting $1 million? No, it's on the life of the child, right? So the point is that it's going to grow over time. Now, here's the thing though, you're not going to take a withdrawal. You're not going to cash it out and go buy a Lambo, right? You're going to keep using your bank that you've now created. You're going to take loans from yourself. So now you don't have to call a bank and give them your credentials and tell them what you're using the money for and show that you're credit worthy or any of those things. You could borrow the money if you want and give everybody in here, you all get together and get pedicures. The life insurance company doesn't give a shit. They don't care what you do with the money. It's the point of like, you need to be a responsible banker and do something smart with it, right?
Y'all, please don't buy pedicures. Don't buy pedicures, that kind of.
You don't want a pedicure, Pat?
Not with that, buddy. Come on now.
You got some scary toes or what?
That's hilarious. But guys,
I
so
mean,
I just want to hear on just on the side
at the end of the day, you could. But that is the point, is it's discipline. So, you know, their trust instructions were, this is going to purchase more life insurance for each one of the members. Now they already have, you know, the snowball effect, right? They have great cash value built up in all of these policies, and they're going to go use that money for income producing ways and pay themselves back and pay themselves back. And so it continues. So that's where the generational piece comes in.
Guys, how interested on the side chat, guys, with a yes? How many people are interested in this topic? Is this interesting to you guys? Is this something that you had never thought of? Like, because it's just one of those things where, you know, I thought it was always something that is, you know, I didn't know it was possible. I had no idea. Like, who would have thought, right?
Jabari have questions. Where's Jabari?
Let's do it.
Hey, what's going on, everybody?
Hey.
Had questions about this particular topic. It was something that I actually just had on my mind and wanted to do more research about. So I want to use myself as an example here. I have a policy, a whole life policy that I purchased when I was probably about 23. A $50,000 policy is what I purchased. So, I mean, I've had it for like 20 years now. So, of course, I'm definitely paid into it and stuff like that. Now, so from what you're saying, even though I've paid into a $50,000 policy, the cash value that I have in there is going to be different than that $50,000 policy. Is that correct?
From a theoretical standpoint, yes, but I don't know. I'd have to review your policy with you to understand what type of product you have. Like I said, not all products are created equally. There are different goals and different reasons for life insurance policies, and not all of them are growth and cash accumulation. So depending on what type of policy was written for you, could have a drastic effect on what type of cash value you have. But you should get a statement every year in regards to that.
Okay. All right.
And I do I love saying that. I do free policy reviews. So, anytime that you're doing a consultation with a life insurance agent, you're going over your financial picture and looking at different ways to structure a policy that fits your goals. That should always be free, guys. Like, usually our fee for service is referrals. So please don't ever pay somebody to go over any of this with you. Don't ever pay somebody ever to write a policy for you. That's the life insurance carrier's job, not yours. So just want to throw that out there in our world of scams. Don't ever do that. But Javaris, if you want, I'm going to put my Calendly link in here for you guys. And feel free to reach out to me and we could set up an appointment. But we could always do a policy review and see if it's something that's helping you with your goals. And if not, did you guys know that there is something that's called a 1035 exchange for insurance products?
No.
Mhm.
So
I
we got
remember
1031 exchanges, right?
1031, yeah.
You know what 1031 exchanges are, right? Well, 1035 is where you can exchange money from financial instruments and avoid any taxable consequences. So there are possibilities of that. I did have a sub-2 client that got a Transamerica policy a long time ago. It was written by some knucklehead that had no idea what they were doing. They were maximizing their own commission. And his policy just wasn't really great. So the problem was, and this is going to be the same in most policies here, is there is a surrender period, right? Where the insurance company is taking on a risk by saying, hey, even though you just started paying your premiums, we have this face amount that we agree to pay. If lightning strikes you tomorrow, we're paying your family and we're losing out on, let's say you gave me $100, your policy's worth $1 million. We just lost a crap ton of money, right? So that's why there's a cost of insurance there. Sorry, it is kind of early and I just lost my train of thought. I'm gathering.
No
My
problem.
God, no, I just completely lost it. I thought I cooked quickly enough. I did some exercises to get the blood moving.
You know what I
Sorry.
like to ask here? I
It's
know
frozen in Alaska weather.
Actually, I'm
Is
sweating
there-
right now.
is there somebody, I think there's somebody here, Robert, that said he's already been had his policy for a
Mhm.
while. Is that Robert? Is that you? How has it been for you? How do you design it and how do you use it? Can you talk a little bit about your experience?
While he's trying to figure that out, Doug, you also had an answer too, Doug. Doug's hand's raised.
Hey,
Welcome, Doug. Good morning.
I've done some. I haven't bought a policy yet. I'm pissed that I didn't do it when I was very young, right? Anybody getting toward 50, get something additional if you haven't already. That's important. That's something I've learned. But I think you alluded to the point of diminishing returns with these policies that some people get suckered into when you were talking about, hey, if it's $1,000 and you can have access to 800, understanding for people going, hey, there's a point of diminishing returns that it can actually putter out and the policy can actually fall off before you do. So not all policies are written so that they expire before you expire. And then I also have learned along the way that people leverage this in business partnerships and leverage these policies on the partners, and it helps them when it's time to dissolve the partnership or buy out one of the partners in a business.
Mhm.
So
Yep,
I don't know if
absolutely.
that's anything you want to speak to.
Yeah, absolutely. And buy-sell agreements can get really tricky. So I don't think we have the time for that today. But it's something that I've considered going forward in any of the bigger partnerships that I do, because I'm currently in a position where I have a business partner on a project that she wants to exit from before we agreed, right? And had we had that buy-sell agreement set up and those policies set up, it could have maybe helped ease that transition. But I don't think, when I was thinking about it, based on what I've negotiated with her on her exit, it wouldn't be necessary. And it was too short of a period. It's only been about 16 months. But it's definitely something to think about if you're going into a large money-making deal. with other partners. Oftentimes they will get life insurance policies on each other, and there'll be a key provision in it to have a buy-sell agreement trigger in the event of certain circumstances outside of death and disability. So that, you know, the other partner who wants to stay in the business isn't now trying to find a ton of money to pay them out. So there's a lot of really cool strategies to be able to utilize life insurance in business for business purposes. And that's actually how I set up my own personal one. It's not, by the way, when you insure yourself, it's not tax deductible for my business, but I wanted to be able to use business funds without having to go through a whole bunch of hoops to be able to fund a policy for myself. So I have a key person insurance on myself, and I fund that through my business. And that's how I'm growing
That's
that
amazing.
policy.
That's amazing.
Wow.
So,
Good.
Cassandra, I just want to ask you, so in the case, right, because it happens, in case we die, and our death benefit or beneficiary is our kids. So we had that policy, let's just say, you know, just to round off the number, let's just say it's $1 million policy, okay, or 100,000, let me go down, 100,000. That goes to our kids. If we put it in a trust, that goes to our kids. And then if we build a trust and we have, let's just say, you know, 4 people in the trust, right? The mom, the dad, the 2 kids. That money goes into that trust, which they would be the beneficiary of that, if that's the case. That's usually how it would be set up. Is that correct?
If that's how you've structured it, so if you make the beneficiary a trust, you're typically going to have trustees who are going to execute your plans as you've designed them.
Yes.
So if you say, upon my death, I want this to happen as far as distributions go from my life insurance policy, and then they get paid, you know, they just get lump sum of money or whatever the case may be, then that's what's going to happen. So the reason why the Rockefellers use the trust is because they didn't trust that everyone would have enough discipline to keep the strategy going, right? So they automatically said, buy a specific amount of life insurance for each person. They're, you know, they can't use the money for anything else, right? And then do this with it and do this with it and do this with it. A trust is going to be a very personal instrument that you're going to sit down with an attorney and create so that it's very clear when you pass away what your wishes are for your assets and how they're distributed. Just as a heads up as well, guys, you know, because I've been on the claim side, even though, geez, that was ages ago when I was in college. A will is not enough to keep your policy at a probate. So the great thing too about setting up, you know, a life insurance here, like you should do it, right? You should do it like Doug was saying, he wish he would have did it earlier. Setting up a trust is a sure way to skip the probate process. And then your family doesn't have to go through that. It's not contestable unless you have a irrevocable trust. And we can get into the legalities of that, but I know we're running short on time. That way your wishes are carried out.
That's
Because
awesome.
when you have a will, it's something that you're suggesting and anybody can contest it. The court's going to get their money. Everybody's going to get their little slice of the pie before your family is able to move on and have your assets distributed.
Guys, if you guys have any questions, just from a time purpose, guys, we're running into the bottom of our 10 o'clock hours. And this is something, Cassandra, thank you. Like, we're going to have to bring you back because obviously there's going to be tons of questions, right? Guys,
Yeah,
just chat,
absolutely.
guys, how many of you guys would like a second Zoom on this particular topic?
I have a question.
Yada. What's up, baby?
Hey, Cassandra, long time we don't talk. Huh?
I know, because you don't
Cassandra,
return my
I
text
know.
messages. I thought you don't love me anymore.
Invite me to go to Alaska and I never been there.
I know.
I just gave a rain check. Don't worry.
Right.
Cassandra, is this infinite banking for everybody?
I don't think so.
Who would not be a good decision to buy a policy?
Yeah, so it's gonna, let's just break it down on a super basic level, okay? And it's not really one size fits all, but if you are struggling to pay your bills, do not add another bill. I will repeat that life insurance is not an investment. It's not something to close your 401k down for and, you know, max fund a policy, okay? It's not an investment. It is a wealth storage tool. And it is a way to round out your financial tool belt. There are so many benefits and advantages to life insurance policies that are the opposite of what you get with retirement accounts and other brokerage accounts, right?
Mhm.
And that's why it's a great diversification. If you're looking to use infinite banking, I'm going to tell you, you can't start a policy with $100 and pay $100 a month and expect to have access to thousands and thousands of dollars. You're going to have access to the money that you put into it and a little bit less than that. So just keep that in mind. And Robert, I'm glad you brought that up because it was something that Doug had said that a lot of people don't know. And I did want to bring up. So remember earlier I said that there's 3 people in an insurance contract: the insured, the owner, and the payer. If you are in a place where you're not very insurable, you can use the health of someone else to still build a policy, supplement your retirement, etc. You can use the health of someone else. So say it's your child, you can use other people outside of your immediate family as long as there's an insurable interest to do so, and any other third parties have sign off. So for example, I have one gal who doesn't have any children, but she asked us about using her niece. And as long as her parents are okay with that and sign off on it, she's more than welcome to purchase a life insurance policy on her niece. And she will control all the money in that account.
So Cassandra, Robert said if you use your children, it would be a lot cheaper. So if I want to do one policy for my kids, like who's going to be the insured, because you were talking about insured, the payer. I know I'm going to be the payer, but
Right.
who's are they going to be going through, like their kids? Because I remember, I'm in the process of getting mine is all approved. So it just now, signing paperwork. But I had to go see a nurse. They get on my vitals, all of that stuff. They check, they go through their underwriting. So how does it work for kids if you want to insure them? The
Yeah,
process.
so usually as minors, it's just they automatically give them a lowered table rating. They just give them a standard rating, and it's typically a quick underwriting process. I'm actually surprised that you went through like a full paramedical. Usually when we're writing policies, we like to use carriers that don't go through all of the fluids essentially. So we try to make the underwriting process with the carriers we work with as best as possible. And they're all A+ rated. They're all the same carriers everybody else is using.
That's awesome.
Yeah. So as far as the kids go, there is an upward limit of that, right? Like you can't go and take out a $5 million policy for your kid if you yourself aren't insured. So that's something to keep in mind. But again, usually when you're max funding a policy, your concept isn't for coverage, right? You're not like worried about the face amount, the death benefit. You're looking to use it to leverage for max accumulation and using that money while you're living and while everybody's living, right?
Yes.
So the coverage piece, it really isn't that big of a deal, but there is a space. So I have 2 sub-2 students that I was working with, have children, but they themselves only combined had about $100,000 in coverage on them, the parents. What they wanted to fund this policy with on a monthly basis, in order for it to not become a MEC, which is a modified endowment contract, that would basically take all the tax benefits away from the life insurance policy because billionaires, they figured this stuff out a long time ago. They're like, great, we'll get a policy for $100,000. We'll dump $10,000 a month in it. It'll grow tax free. Uncle Sam doesn't get that money. And then of course they became privy to it and they're like, wait. We're not allowed to do that. If it doesn't pass a certain test, now you're using it in a different way other than intended for life insurance, and it's going to lose all of the tax benefits that go with a life insurance policy. So again, they were only at $100,000 combined coverage for the parents. They couldn't go and get a policy worth $200,000 for their child without bumping up their coverage. Because they wanted to fund it. I mean, because with their children's health, it was going to be a lot cheaper. They wanted to be able to dump a ton of money into it, which means your face amount has to be higher. So that's where you start to run into struggles with that. So
okay,
yes, 100%. being able to use your children's health will be able to help you build amazing policies, but there are limitations to that as well.
Okay.
Yes, Chris has a question. Hi, Chris.
Hey, good morning.
Good morning.
Good
Oh,
morning,
Chris,
Chris.
you came on and then you muted yourself again.
Hey, good
I
morning, guys.
think he mute.
Good morning.
Excellent. Yeah, so my question is on the tax benefit side. So say if, hey, I did really good this year and I need to lower my taxable income, right? So can I, when I say if I put 30,000 into it, that will essentially lower my taxable income.
Nope, not at all. This is after tax dollars. Now, so here's another thing to keep in mind, you guys.
Okay.
What do we know about taxes? Do we think they're going to go down? Do we think they're going to go up, stay the same? Do you think they're going to quit making us pay them at some point?
We hate them. We don't want to pay them.
Right, right.
That would be
So
nice.
when you think, and this is one of those things where life insurance is filling in those gaps of other financial tools. So your life insurance is not taxable when you're taking distributions through loans, right? And it's not taxable to yourself if you're going through living benefits. So if you become critically ill, disabled, terminal, they'll actually advance those death benefits to you while you're alive. And that's honestly one of the #1 reasons why I have it, because I'm not trying to end up in a nursing home on Social Security, because I think that probably they all are scary. I don't want to do that, right? So I want living benefits for myself. That's one of the #1 motivators for me. But that money is not taxed then, but that money's been growing this whole time, right? So when you're thinking about it, you have your seed, your money that's you've already been taxed on, that is growing over time and will not be taxed later. So just keep that in mind. This is after tax dollars that you're funding these policies with. There is one exception to that, and that's if you have a business and you are purchasing life insurance as an incentive for one of your key people and in the organization, or as an executive bonus policy, your business can write that off, but it's not going to be something that's insured on you, and it won't be a way for you to reduce your taxable income.
Okay, excellent breakdown. I appreciate that.
Absolutely, absolutely. And it's also not something that becomes a part of your income either when you're utilizing it through loans. So remember, loans aren't taxable. And that's basically how we get away with being able to use the same dollar twice, have it growing in 2 different places at once, and it's not taxable because it is a loan, even though it doesn't technically have to be paid back. But as Pace would say, I'd karate chop you if that's how you took care of your bank, you know?
That's excellent. I'm going to reach out because I'm raising capital for new construction. So this
Excellent.
is just another vehicle for people to invest and then kind of put them onto the trust side of it. And then we can both points. So appreciate it.
Yeah, absolutely, Chris. Thank you. I'm looking forward to speaking with you. And this is something that Pat brought up earlier, and I didn't want to muddy the waters. Say you did a fix and flip, now you have $100,000, right? You could go and buy another asset. He was saying, what about putting it into a life insurance policy first? And I think that's an absolutely great idea. I think that, you know, when you're wholesaling and doing those things, like I can structure policies for you where we can limit the amount of payments that you have, that you're not paying your whole life. I love whole life policies, and I also love index universal life policies, and I love them for 2 different various reasons. We'll get into that one-on-one. But essentially you don't have to pay forever, right? We can structure this where it's like, we're going to set you up to only pay for a certain number of years, and then the policy will fund itself. It'll be self-sustaining with the growth. So that's something to keep in mind. I think that's really important for all of us as well. You know, you get these, even for a 20 pay, you're like, oh my Lord, I got to pay for this thing for 20 years, you know? We can structure policies where you don't have to do that, especially when you're getting those big chunks of change. Yeah, so like, let's say I put $100,000 in, I'm not gonna have access to $100,000 on day one because there's gonna be cost of insurance, right? But now you've just put yourself in a position where that $100,000 is always gonna be in your family bank. You're not putting it in Chase of America where they're lending it out 9-15 times over again, and they're getting the interest on it, right?
Yes.
You're gonna put it in your own bank, you're going to borrow from yourself and you're going to pay yourself back responsibly. So, and at the
That's
same time, your money is growing while you have it deployed and working for you.
that's what I love about that.
I love it, yeah.
Right. Because it's just like, you think about guys like when you put your money in the bank, just put it like in simple terms, they take that money and they loan that money out. Like that money is never there. So this is something that as a tool for us as investors and us as our community, it's like you can put your $100,000, or let's just make it, simple, right? You can put your $10,000 into the bank and it's going to earn this 5%, right? Let's just say percentage, right? For like 5% interest. And then you're going to go back and you're going to loan that money back out to yourself. Like, oh my gosh, that's just mind blowing. Like we're becoming our own things. Now, I got a really dumb question, but in terms of the fact that, and I don't know if it's possible, but can all of us put some money together and get one policy?
No,
Okay.
no, you may not. But I mean, you can do it on the DL, I guess. You decide who's the insured, and then that person should really hope that nobody decides to kill you in a freak accident. I don't know if any of you guys have heard this, but
No,
that was
no, no.
actually a scam. Two older women were running in California. They would pick up homeless people off the streets. They would bring them in for a meal, you know what I mean? Get them comfortable. They would take out a life insurance policy on them. And then within like a few months, say 6 months or so, they'd run their asses over with a car and nobody would care because they were homeless. So nobody reported that these people were missing. I mean, these women probably cashed in. I'd have to look it up because it was a while, like back in the 90s. But millions and millions of dollars they cashed in until somebody finally caught on what was going on with it.
Wow.
You gave me a
Wow.
great idea, Cassandra. That's a great idea.
That is
She
not
said-
the idea you should be getting in the morning, my friend. Yeah, there's so many amazing applications for insurance, and it's just one of those things that, and Pat and I were talking about this yesterday. It's one of those things that because we don't really teach a lot of financial literacy in this country, we don't talk about, right?
So right.
But at the same time, I think that if it was widely known and talked about, the government would find some way to take away all the benefits of it. So let's just keep spreading the word to our friends and family, right? Making sure people understand the importance and that there's so many different applications. So, not to toot my own horn or anything, but try to find yourself somebody who, like, especially like me, who isn't a life insurance agent first, and that is my sole income, because I do make money when I write policies, you guys, but I have a team of people that I work with that are full-time. They keep track of product knowledge. They keep track of that technical back end because I'm a real estate investor first. And I can tell the difference in my presentations to other people's presentations. I don't know who, I know we're running short on time here. Did anybody see the PowerPoint or the Zoom with Brent Kessler and Pace?
I saw, yeah.
Yeah, I saw a couple people saw it.
Yeah.
It was really, it was like uncomfortable for me to watch. Brent, he kept trying to sell Pace on the fact that he needs to buy a policy. And finally Pace is like, bro, I'm gonna buy a freaking policy. You don't have to tell me, like, I already know. I want to talk about how to utilize it and with my strategies. And it was like, he just couldn't make that switch. And I just see that sometimes, that I just don't think that they can understand like where our thought process is and help us really put together things that fit our goals and know about other products outside of just utilizing infinite banking that could be really important to us in our businesses.
But I think it's amazing for us. That's why we love and enjoy, our community and these kind of communities, because that's something that we, you don't think that it exists. Like, oh my gosh, you can, do what the Rockefellers are doing. You can do what the U.S. bank systems are doing. Like, it's so many angles that we can do it together, and even if we're small, I mean, one step, there's 36, almost 40 people that was here from give or take. Like, if we just get together and just do these things together, we can grow together, which is, I think it's amazing, But Cassandra, thank you. I know we're going to have probably a few more questions we can go over a little bit. I just want to thank you so much for coming on, and at least, giving us this nugget and this
Education
Education,
was
yeah.
awesome.
Absolutely. Absolutely. I put my Calendly in the chat a couple of times. It is one that has more questions, you guys, because I think you all know we got to protect our time. And, I definitely want to make sure we're having serious questions, because otherwise I'd just be on the phone all day long. So I threw that in the chat. Please feel free to book with me and we can kind of go over what your questions are and personal goals. And then Pat, I'll also send it to you again as well, just in case anybody
Thank
missed
you.
it.
Thank you. I think
Yes.
we're gonna do, Chris, we're gonna do round 2, right? We should do another one.
Yeah, I mean, as long as Cassandra's available, I'd love to learn more, even though like I'm getting my own, but there's so many questions, you know, like the things that I'm like, oh, how about this? And there's people asking questions make me think too, like this is, you know, I have, there's one question in the chat and Simone has a question too.
Yeah, I mean, I don't have anything for the next 3 hours because that's when we normally meet in Alaska. So yeah, I got time.
Simone, are you there?
I just had a quick question. What is the
ma'am.
turnaround time when you put the money into the policy to be able to borrow it?
Yeah, so once your policy is funded and in force, you can actually call like the next day. They're not going to tell you, your carriers aren't going to tell you that, but if you have a good agent, they'll help you do that.
So like you get your money the next day or you request your money and then takes a couple of weeks? Because that's what mine is. They told me it's going to take a couple of weeks.
Right, right. So, I mean, essentially you can, once your policy is funded, you can request a loan immediately. As far as how long it takes, it's going to vary on carriers. Guys, I'm able to write with over 50 carriers. I'm not even bothered to be appointed with all of them. I just have access to them. So, you know, we have like, you know, my back end folks that do all of their like cool research and everything. It's irresponsible to be a life insurance agent and not be full time unless you have somebody like doing that. So I'm essentially the referral partner, right? Where I bring in clients that I understand what their needs are, and then I'm like, this is what you need to go create for them. But yeah, it's going to vary on carrier, and each carrier is going to have different loan rates. They're going to have different crediting rates. There's going to be so many different like nuances. What I would recommend to anybody who's like shopping around is that you can literally, and honestly, I'm taking this from Chris Noggle because I saw a presentation from him a long time ago, and until I started studying it, it didn't really make sense to me. You could go and beat yourself to death comparing policies on, okay, how much can I borrow from this company charges 6%, this one charges up to 8%, this one charges 4%. This is how these policies are credited. You could beat yourself over the head comparing those things. At the end of the day, we as investors don't need to worry about that. And the reason being is because what we're going to leverage the money for is what's most important. So how we're leveraging that money and making money outside of the policy is the most important thing. That those few percent in these few different categories and how this works is so minimal that it's just not worth your time to do that.
And Anita is asking, can you have several policies at different dollar amounts?
Yes, you can. Yes, you
But now if I open a policy for like 50,000, I cannot add to my policy, right? If I want to add more money to the policy, I have to open a new one, right?
No, you can increase your face amount, but you're still going to go through underwriting again. So that's why that's why it's a balance here, right, guys? You know, that's why I put that caveat on why I'm going to hoorah for insurance in the beginning, is because you don't want to find yourself in a position where you have liabilities. Now you're thinking about your mortality and you can't get insured for a reasonable amount, right? That's why it's something to think about now or as soon as possible or whatever, because you don't want to find yourself in that position. So the best part about getting yourself a policy when you're younger and getting a policy that's significant enough to cover your liabilities, say that you want your mortgage to be taken care of or whatever, you decide what your goals are for your policy upon your death, to get something substantial enough for that so that you don't have to go through underwriting again, because each time you go through underwriting, you're typically going to be older. And as you continue to grow older and or health issues present themselves, your insurance is going to become more expensive.
Yes.
But yes, you can keep buying policies all day. Like you could have, I mean, I think Brent Kessler was talking about having like 40 policies or something like that. And the reason being, you guys, is because he's doing he's doing a low face amount so he can max fund them. So it's a trade-off, right? He's got a lot of
Right.
value, but
That's
there's not a lot of coverage, right? So
right.
there's trade-offs on what your goals are. And that can sound confusing as I'm talking about it in generalities, but as you're having these financial analysis meetings with your agent, that's something that should become very clear to you based on your responses to what your goals are and what your current financial picture is.
Yeah, that's the way you design. There's somebody asking, what is the largest amount you contribute to the policy to start?
That depends wildly.
Yeah, on my
We-
case, from my experience, they check how much money I made last year,
Mhm.
and they kind of came up, this is how much you can afford.
Oh yeah, there's lots
A
of ways
lot.
to throw red flags. I mean, terrorist cells and things like that use life insurance as a way to launder money. So, there are a lot of checks
Oh,
and balances in place.
okay.
It does have to make sense what you're insuring yourself for.
Got
Your
it.
policy has to make sense. So it's not just like willy-nilly, right? Now I have my upline, my executive director has a case right now where he's writing a policy for a woman for $5 million. Her first premium is going to be $333,000 as a lump sum. And then she's
Right.
going to fund it $100,000 a year. So everybody's, that's the biggest case he's ever done. But guys, everything is really dependent on
But
your situation.
it gotta make sense. That's the
Yeah,
most important. Yes.
absolutely. I have another gentleman whose father wants to fund a policy for his granddaughter, but he doesn't believe in bank, he doesn't trust banks. He doesn't really trust life insurance. He wants his son to go buy a piece of real estate for $100,000 and keep it up for his child as something to give them some sort of wealth, right? Which is such a great thought, right? But the son is like, Dad, that's not really how it works. So he's like, and I'm not trying to manage like a single family home. It doesn't fit what my journey is or whatever. Obviously he could do a lot more with $100,000 and get a single family home, but nonetheless, it's just like the concept his pops has in his head, right? So there are ways, say that you get a large chunk of money from a project, wholesale deal, fix and flip, whatever there is, you can put it in an interest earning account, typically with the same carrier. It's called a premium deposit account, and it can fund your policy for you.
Wow.
So it's earning interest and then it's funding your policy for you from that lump sum. Because I think that Katie had, or KGC Investment Group had the question about the largest amount you could contribute to a policy to start. There's these dump ins, but again, we have to make sure that we're avoiding you becoming a modified endowment contract. And we have to make sure that your face amount makes sense for the amount of money you're funding the policy with. But we have a lot of tricks to manipulate that, right? In order to meet your goals. So hopefully that answers your question as far as largest amount to start. It depends. It depends.
All right. So thank you so much for your time, Cassandra. Guys,
Oh,
probably
my
gonna have
pleasure.
her over another Zoom for sure. Any housekeeping stuff that we need to go through, Pat?
Yeah,
Guys, connect with Cassandra. I know she put her Blink or Calendly, so get set up and understand this is amazing. I'm so excited to get mine.
Yeah,
And
thank you
start.
guys for having me this morning. I really appreciate it. And Christiane, if you ever have any questions and you want to switch your agent or record, you let me know, girl.
Oh, I will. And I want to do more policies too. This is my first
yeah.
one, I want to do more and, it's amazing. We got to think like the wealth things, right? Like it's just different way of dealing with money, cash, and
Absolutely.
it's, yeah.
And you know what? I would be remiss. I heard you guys talking about what you're getting interest rate wise. I do have a condo conversion deal I'm working on up here in Alaska. I'm not the principal. I'm raising money, but she is offering 17% on the return for the year with some immediate principal return after closing for transactional costs. So if any of that sounds remotely interesting, reach out to me because we're looking to fund that in the next 2 weeks. Already have 200K raised. We need another 250.
Nice.
Guys,
Word.
just, no,
Appreciate
thank
you
you,
guys.
thank you. So, Savannah, are you still in the house? Where's my Savannah folks? Who's here from Savannah? Anybody?
Oh, Carrie, where's
Carrie,
Carrie?
can you
Carrie's there.
come in?
I'm asking her to unmute.
Yes. Hey,
Yeah.
Hey, Carrie.
Hey.
good morning.
Good
This is
morning.
great
Carrie,
information. Thank you
just
so
as
much.
before we leave, just housekeeping and things like that. Can you tell us about the Savannah sub 2 meetup that we're scheduling there?
Yeah, it's going to be at 208 Wine Bar, and we will post. Is it okay to post the flyer for that I'm finishing up today in the Atlanta group also?
Oh, please,
Yes,
more than
of
okay.
Yeah.
course.
It's a must.
Yeah, since I know a lot of folks are talking about road tripping and all that kind of thing. I so hope that everyone was able to find lodging here who's going to stay over. I wish we would have sort of planned ahead for that because I would have loved to have hosted everybody. We've got a lot more availability, obviously, in the winter months, so maybe that's something we could plan for coming up at the beginning of the year or later in the end of the year. If there are things specifically that y'all in, well, I guess on the Zoom in general, but they're in Atlanta are interested in knowing more about specifically here in Savannah, maybe that's something I'll do in ask a question if that's okay with you guys in the Atlanta's Facebook group, but then I'll also post it in the Savannah group to kind of find out like what everybody's interest here in Savannah is and how many people we're close but we're so far, so how many people are really familiar with Savannah. We're in such a changing market. We talked about that before, and we'd love to be able to bring whatever content also supports our Savannah market as well as the
Carrie,
Atlanta
so tell us
market.
about the timing. So tell us the date that you have and the timing that we set it up and location. And we're gonna post it. Just want to let everybody know we are having our first official sub 2 meetup in Savannah.
Yes.
And yes,
So you're catching me off guard. I don't want to misspeak. Sometimes if I'm not directly looking at something, I will.
no problem.
I
No problem.
I'm dyslexic, so I will actually say
It's
the wrong.
Saturday the 28th.
The
It's gonna be
28th.
in a Savannah wine bar.
Yes. And we settled on, we had two different times. What is the time that we settled on there?
Chris, do you remember?
I think 5 p.m.
Yeah.
I remember seeing 5.
I think we were talking about 4 to 6 was sort of our window that we were talking about, but I will
Yes.
confirm that for everybody. And as I said, I have it over at my desk.
And we're trying to organize some people here in Atlanta to get an Airbnb because like if everything goes well and we all go, I got to see my kids soccer, but I wanted to spend the night there,
Yeah.
and make it a trip. So I
Yeah.
was talking with all the members of Sub2 from our, community. So we'll get a Airbnb, let us know if you guys want to come, be part of it. And, so we can make it really nice.
Yeah,
Spend the
absolutely.
weekend there and, network and, do all of that.
We could do the
Yes, and
ghost hunting tour, right? The hunt Savannah tour.
Oh, yes.
Yeah,
Get
there's
them out for,
walking tours.
October.
There's like a hearse tour. There's all kinds of interesting tours for sure. Hey, fun fact, when I was in college, I was a carriage tour driver. So I gave carriage tours back in the way back. So if anybody wants to know anything
you.
about architectural or Savannah history, I love to talk about that too. But yeah, and that's great. And if you guys like, I mean, not to make too many planning elements, but while everybody's here, it would be great if we want to get together maybe later for something for dinner. We could be sure to book that depending on how many people we have that might want to come for something like that, or brunch in the morning before everybody leaves. I mean,
That
whatever,
sounds great.
yeah, whatever makes most sense.
Amazing.
Okay, let's get that flyer out, Carrie. Let's get that flyer out. We can play that. And then
I'm finishing up that this morning, and I'll post it in both groups, and then I'll also pose that question. But if anybody needs help with lodging or isn't familiar with Savannah and needs to know. But the 208 Wine Bar is actually right on the river on Factors Walk. It's a beautiful location in one of the historic buildings there that are at River Street and Bay Street. So you're right along the water. So if you're booking something that you're looking to be able to walk or even Uber to, the location is right on the river.
You know what would be cool too, Carrie? Just and then guys, we're running short on time, so I just want to end it. But I want to bring Tim up too to talk about the camping trip that Tim is and I are working on. But Carrie, just real quick, it would be cool if you guys can pull up a couple of deals, like Savannah deals, and kind of show us and kind of see what we would be getting into. Maybe someone wants to fund it, maybe we want to do JV agreements. Anything that it would be cool. I think it would. I know you and I talked about a multifamily kind of Airbnb that's for sale. I mean, I think we can focus on JV, teaming up, funding, so many angles to it. But it would be cool to see properties and different kind of properties out there. So yeah.
Absolutely. Yeah, I have everything from, down to a just under 300K in an upcoming. We have so many sort of up and coming areas that are interesting for so many different reasons. And I'll actually make a map that kind of has districts per se to say, like the historic district, obviously that's, clearly established and what you are and are not allowed to do. But then all these other areas that, some are warm, some are hot, some are just starting to catch fire. So I'll make an overlay map for that also, which will probably be helpful for everybody.
Right. Thank you, Carrie. Tim, do you want to come up and talk about the camping trip that we are just kind of planning and working on? Tim? Tim, we can't hear you, Tim. I think Tim is still asleep. I don't think he knows how to work his audio. Tim, aren't you a DJ, Tim? As a DJ, you should know how to do the audio system there.
I'm gonna come over there and crank you and karate chop you, bro. There's a lot of screens going on. Too early for a DJ, man. Come on.
It is early. It is early.
Yo, I don't sleep either. So on top of being early, it's like I'm exhausted. I wake up like out of a punching match. So yeah, I'm ready to karate chop now. You want to talk about the
just talk about the plans and the ideas. We can pinpoint all that, but just let everyone know just ahead of time. So we're planning on.
Well, so we talked about yesterday doing the Palisades hike on October 20th, and then maybe doing camp out November 1st weekend, something like that.
Yes, we're doing Tim is going to host it at his Airbnb up in the mountains, right, Tim? Right?
Yeah, we got 13 acres, so we can we can all camp around the house. We can camp down by the barn. We can camp by a river, whatever. So yeah, there's places for, like, if you want to be next to a bathroom, we got to be up toward the house. If we want to rent a porta potty, that's what I did for the wedding. We can be kind of more secluded, but there's options. So for sure, that date, I think before it gets too cold, and then it's still nice and the leaves are changing. November 1st is like prime. So yeah, anybody that has interest in it, maybe we need to create a RSVP and just see how much interest there is, and then kind of plan from there.
That sounds awesome.
Sounds good.
But yeah, guys, no, I just wanted to bring that to everyone's attention.
Absolutely. Yeah, we're excited about it. Me and Pat had a little chop session yesterday. So, but yeah, the hike on October 20th, you want to try to nail that down and see if everybody's down for that, and that'll be an initial kind of gathering interest as well.
Yes, that's correct. Yes. But yeah, that's the plan for now. We're gonna go back and check the schedule, but we're trying to do a hike on the Chattahoochee just to kind of gathering, just to get people together.
Right.
It's gonna be on a Sunday.
On the 20th.
Yes, on the 20th.
Sunday's perfect for the DJ.
Yeah.
So, and then one last thing before we let everyone go. Chris and I have been talking. Chris from Augusta, Chris. We are trying to get Augusta sub 2 group and the Facebook group going. So when we get that going, we'll make sure we pass it out to everybody and make you guys go join. And I'm trying to make it where, I don't know if this is going to be a annual thing. If Pace goes to Augusta every single you know.
Oh, for the Masters.
We can do that for the Masters.
April. He comes here in April, Pat, usually, because he came last year, he came this year, so I'm sure
Well, he's going to the Masters. That's what he's coming for. So
Augusta. Yes.
Yeah,
You're
just
right.
wanna,
Yeah. So he did tour here. Yeah.
yeah, Pat, we're not trying, so we're doing it. Let's say we're doing it, so it's moving forward.
Exactly,
Right.
guys, and Heather, she's putting there. We need a calendar for all these events. Heather, help us, like and put because the thing is like we can see what he like to go back and like, okay, let's organize and get everybody. And you can put on our Atlanta subject too, and people can RSVP, like if you guys can help us with that, and so we can really get it going. I know we're gonna be some of us gonna be in Boston for the Honors Club end of October. But we can do first week in November for the Blue Ridge, Tim.
Yeah,
Gonna be
that's why we
amazing.
planned
Love
it.
it.
You guys were going to be maybe in Boston, so that's the week
Yes.
following, which is perfect for me because the 28th is the most busy DJ weekend of the whole year. So hopefully I'll be rocking some crazy Halloween party, making some money.
All right. Yes.
All right, guys. Well, thank you so much. It's 10:30 mark there, guys. Just if you guys put on the side there, what do you guys think? Well, how was
Hey, can I just say something, promote? I have a friend, she's selling her condo, seller finance. It's not for investors, it's more for end buyers. If you guys know of anyone looking for a City of Decatur condo 2-in-1 with a pool, HOA 385, I think. Let me know. She's doing seller financing and asking for 10% down, but everything can be negotiable. So let me know. Beautiful property right in the heart of Decatur. So
Can you send me the info on that? I might have somebody for that.
yes, definitely. Yes, guys, help me. She's, she really wants to give, to be done with all her HOAs and property that she has. So she's, we can always negotiate and I can present to her.
Definitely. I was also
And
interested in that 17% deal in Alaska. So
that sounds great. Yes. All right, guys.
All right, guys. Have a happy weekend. Happy Friday, guys. Thank you.
I'll see you guys later.
Thank
Have a
you.
great weekend. Thanks,
Ciao.
y'all. Have a good day.
Thank you.